response maybe. It's okay.
Good morning, ladies and gentlemen. Thanks for joining us today for the NBR Update webinar. This is the second of a series of 4 webinars we will be holding this month. The first one was held last Thursday on how to prepare a VAT return, and the following sessions will be on financial services, particularly on the relief announced by the CBB due to COVID-19, as well as economic substance requirements. If you have not already registered for the upcoming sessions and you're interested, please get in touch with us. The webinar session today is to talk through some of the NBR updates since inception of VAT in Bahrain. Now, Bahrain VAT is evolving continuously, so does the NBR updates and clarifications. It is important for you to stay up to date in order to comply with the latest VAT legislations and NBR guidelines. Now, before we start our session today, I'd like to introduce the presenters and panelists briefly. My name is Dao. I've been with Keypoint since 2017 and have been working on GCC VAT. Prior to Keypoint, I was previously with Big 4 firms working exclusively on GST or VAT. Today, I'll be presenting alongside my colleague, Tariq, also a tax manager at Keypoint. And prior to joining Keypoint, he was a VAT inspector at the UK Tax Authority. Now, a lot of businesses will find his experience particularly useful when it comes to NBR audits, and he will share some of his experiences at a later stage of the webinar. We are also joined by 2 panelists. The first member is Mubin, our head of tax, as most of you would know. Mubin started the Keypoint tax practice in Bahrain back in 2017, and today he's also leading the Keypoint Saudi tax practice. For those of you who don't know, we have an office in Saudi providing a range of tax services. Now, if you're interested, please get in touch with us. And lastly, the second member is Mark, one of our senior tax managers. Mark is a qualified lawyer and has worked in Big 4 in Australia and UK prior to joining Keypoint. Now, before we move on, if you have any questions, please feel free to post them at the Q&A section and our panelists will get back to you. Now, let's have a look at the first slide. Now, these are the guides, the manuals, public clarifications and tools made available by the NBR on their website or by the relevant authorities for you to refer. Now, some of these have been updated since their first release, and NBR will continue to do so whenever necessary. The VAT payer tool is particularly useful to verify supplier and customer VAT information and thus potentially unlocking your input tax claim. Recently, we have seen certain information, now mainly addresses, published as NA in the NBR website. If this is the case for you, you should write to the NBR informing them of the issue in order for them to update their system and records. Now, just before we start, I'd like to know, how do you keep up to date on VAT law changes and NBR updates? We will do a quick poll right now, and you should be able to select your answers right about now. I will give you 10 seconds to just look at the questions and see which is your answers now. Okay.
Give me a few moments.
All right. Response are looking good. Okay, now let's have a look at the results. Seems like the majority got their updates from directly from the NBR website, which is great. Now continue to do what you've been doing, and it's always better to receive updates from more than one source. All right. Now, if you want to have regular newsletter updates from us, please contact us. Now let's look at the first slide and the first guide for today. The NBR has clarified that certain services are not exempt from VAT, which includes provision for use of a specific area, such as vending machine or shelf space to display goods, mooring rights and jetty rentals, unless it is fixed on a concrete. And a more relevant example is a car park for less than a month. So if your car park lease is for a period of more than a month, it should be exempt from VAT. The real estate guide also clarified that the reclaimed land is not considered as building for zero rating purposes. Now, for your benefit, building is defined by the NBR as a residential, commercial, or industrial building, and they should be immovable, which has walls and roof. As you can see, reclaimed land does not fit within the NBR building definition, and the NBR has made it clear that it does not qualify for zero rating. Now, for apportionment, always remember, you need to apportion where part of the contract relates to zero-rated construction of new building, and where part of it does not. And it applies to advance and installment payments as well, which means long-term construction contract that may take up to 2 to 3 years or more. You should always consider right at the start how much it relates to 0% and how much it relates to 5%. Also ensure they are displayed on a line-by-line basis on the invoice with separate VAT treatment if you were to bill both at the same time. Now, the next one is a welcome update to the construction industry. Ready-mix concrete can be zero-rated regardless of whether the supplier has any role in pouring the concrete into the foundation or the structure of the building, or whether the supplier simply deposits it on the site. Now, Mubin or Mark, do you have any comments on this?
Yeah, Dale, thanks for that. So just jumping back to the apportionment point on the long-term construction contracts. So practically what I think we've been seeing with our clients a lot is most construction services suppliers aren't actually doing this apportionment right at the start of the contract. So when you receive that advance payment, you need to really sit down and assess at that time what portion of that payment relates to making zero-rated new construction services and what portion relates to making 5% normal services. So if you're building a new building, you can't automatically jump to the conclusion that everything that I'm supplying is 0% because it's related to a new building. You need to look at what am I supplying. If I'm supplying, say, landscaping services, then even if that is in relation to a new building, it will still be 5%. So you need to make sure you're apportioning that advance payment right at the start, and the NBR will expect you to have records of that apportionment. And just another point on that ready-mix concrete. So typically when you're performing new construction services, any goods that you supply as in the process of providing those construction services will be zero-rated as well. But ready-mix concrete is one of those weird type of goods/services where you're supplying concrete, which is a good, but there's also the service of mixing it on site and delivering on site. So the NBR has just come out and said the whole thing is zero-rated, which is interesting.
Thanks, Mark. Thank you very much. Now let's move on to the next slide, which is very important as it potentially changes the VAT treatment of your supply of construction services. Now, as a start, if you're a subcontractor and you do not have the relevant certificate or documents from the main contractor or property owner or landowner, you should always apply the standard rate VAT unless stated otherwise. This is the control mechanism put in place by the NBR, and it should be followed thoroughly prior to zero-rating construction-related services. Now, the NBR has clarified that if the subcontractor receives a certificate after issuing standard rated invoice, the subcontractor needs to verify with the customer, okay, to see if he has claimed input tax credit. If yes, the subcontractor should not cancel the previously issued invoice and reissue a new invoice at 0%. Now, in any case, the net effect is nil for businesses who are able to claim such credit. If the customer, however, has not claimed any input VAT, the subcontractor should issue a credit note to cancel the originally issued standard rated invoice and reissue a tax invoice at 0%. Okay. Now, before we move on to the next slide, what do you think is the answer to this question? A quick one, guys. Who can issue a new construction certificate? Is it A, the NBR, B, the property owner, C, the main contractor, D, both B and C, or E, all of the above? Now, we'll give you 10 seconds to think about it. 5 seconds left. And all right, folks, the answer is D. Option D, both B and C. Always remember, only the main contractor and property owner can issue a new construction certificate as per NBR's guideline. Also remember, crucially, NBR does not verify nor certify whether any supplier will qualify for zero rating. Now, the discretion is at the main contractor or property owner, and of course, the suppliers, or otherwise known as the subcontractors. Okay. Now, the next guide is related to a niche industry, which is the transportation industry. The guide has clarified that for services directly or indirectly associated with international transportation are zero rated for VAT purposes. Now, services provided by airline companies, shipping companies, etc., is considered as services provided directly in relation to international transport. Now, services provided by a third party, for example, indirectly provided by a third party, whether the third party is a subcontractor of the supplier of the transportation services or hired directly by the person receiving transportation services, is considered as services provided indirectly in relation to international transport. Now let's have a look at point 2. The guide actually covered whether the sale of duty-free items on board can be zero rated. Now, for consumers like you and I, there will be no difference anyway. If we will both effectively pay zero VAT, whether the supply is zero rated or out of scope. Now, airline companies, however, will need to determine the VAT treatment based on where the plane is situated at the time of sale. So they have to look at where the plane is in terms of international waters or airspace when they sell the goods on board. Now, move on to the next point. The NBR has clarified that the zero rating of loading and unloading services extended to imports and insurance as well if it's related to actual transportation. Now, so for those of you who has been charged 5% VAT by your freight forwarders, perhaps you should consider speaking to them to clarify all this. And point 4, interesting point on airlines. E-tickets, electronic miscellaneous documents, and airway bills can be considered as a tax invoice where the supply is made by an airline and the supply is related to international transportation of goods and passengers, as well as goods and services directly or indirectly related to supplies of international transportation. Okay, so always remember now, your e-tickets and your electronic miscellaneous documents can be viewed as a tax invoice, subject to meeting all the requirements. Food delivery typically will only qualify for zero rate if you engage directly with the food delivery company. In all other cases now, it should be subject to 5% VAT as the delivery service is ancillary to the food, which means the main supply, which is the food, is actually subject to 5% VAT. And the very last point in this guide is a very interesting one. Mark, would you like to elaborate on the whitelist?
Yeah, so this whitelist is actually more of a concession for businesses operating in the international transportation industry. So if you're in that industry and you have a vehicle or an airplane or a boat that predominantly engages in international transport, so zero-rated transport, then when you buy and sell those means of transport, you can often either treat it as zero-rated or as exempt from import VAT. So what this whitelist does is you apply to the NBR and you set out the fact that the majority of your supplies are zero-rated international transport, and when it comes to selling and buying your actual means of transport, you can just tell either the seller or the buyer that you're on this whitelist, and you therefore meet the requirements for the zero rating or exemption. So it's an interesting little concession. If you're in that industry operating in international transport, it's one to look at.
Thanks, Mark, for the detailed explanation again. I'm just going to pass it on to Tariq right now, who will continue with the updates on changes in VAT return filing frequency.
Thank you very much, Dal. Okay, guys, so around the 20th of March, that's last month, NBR opened up applications for businesses who have supplies below 100,000 dinars so that they could request an annual VAT return filing, okay? Now, the process involved businesses logging into the NBR online portal and submitting a request to amend their VAT return filing period. There was also a requirement to submit a letter justifying the change request. Okay, we're not sure why, but there was a very short window of about 8 to 10 days for businesses to submit this request. And the deadline passed on the 31st of March 2020. So those who have not applied will essentially have to wait till next year, okay? Okay. Now, the NBR should notify those who applied. They should notify them via the NBR online portal. You may get a message by SMS or email. If you don't receive anything like that, then we recommend you go into the portal and check to see if there is any update from the NBR in any case, okay? Excellent. Okay, another guide that's been published is a VAT return modification manual. This is really important for every business, okay? Because every business will have issues, for adjustments or for corrections, okay? Now, adjustments, that's the first thing we're gonna cover. Now, this is where the value of a supply has actually changed. I'll give you an example. A customer purchases a washing machine, but after a week returns it. Now, because they returned the washing machine, there is a change to the original value of the supply, okay? And this change must be accounted by way of an adjustment. Now, if the supply was made in the same tax period, the adjustment should be netted off against the amounts column of the VAT return. However, if the adjustment relates to a supply that was made in a prior tax period, the adjustment must be reported in the actual adjustment column of the VAT return, okay? Please note, for VAT purposes, an adjustment should not be confused with an error or a mistake, okay? Now, a lot of businesses don't do this. They just always net it off in the amounts column of the VAT return. That is not the correct way to do that, okay? And the second point was, covered in the guide, was how a taxpayer should deal with actual errors and mistakes that they've made. Now, please note, errors are reported differently depending on when the error occurred and the amount of the error. Now, if you have an error or a mistake that has been made in a previous VAT return, you must log on to the NBR online portal and amend the VAT return that was incorrect. There's one exception to this, and that is if the error you made had a VAT effect of less than 5,000 dinars and it relates to the last VAT return. For example, you're completing a Q2, that's a quarter 2 2020 VAT return, but the mistake was in quarter 1 2020, then you may make a correction in field 15 of the Q2 VAT return, okay? But if the mistake was made in the Q4, so that's a quarter 4 2019 VAT return, then the option of using field 15 is not available and an amended return is required to be submitted, okay? Now, please note, where there are errors in reporting which have a nil VAT effect, so it is not possible to use a corrections field, and so you should submit an amended return for completeness purposes. For example, you forget to report zero-rated supplies, it has no VAT, so you can't report it by the corrections box, so you must go in and amend the VAT return, okay? Just a quick thing, when making an amendment, it's best to ensure you provide full details to the NBR. You'll need to provide a reason why you're amending, original amounts, amended amounts, confirmation of the difference resulting from the amendment, why an error has occurred, and what you are doing to ensure it doesn't happen again. Okay, that's really important. We always recommend you put a detailed comment, how you're improving your processes, controls, whatever it is, so the NBR has some comfort that actually you're taking it seriously. Okay, guys, we have a question for you. Okay, ABCWL forgot to report a sale transaction in quarter 3 2019, but only finds this out in April 2020. Now, what should they do? A, report in the next return as a sale. B, amend quarter 3 2019 VAT return. C, report in the current return as a sale, or D, report in the correction box of the current return. Okay, I'll give you a few seconds to think about that one. Okay, so the correct answer is option B. The business should go back and amend the Q3 2019 VAT return. Why is that? It's because the error does not relate to the previous tax period. It relates to a prior tax period than the prior tax period, if that makes sense. Okay. Now, the guide goes further to explain the structure of an NBR assessment and audit. So when the NBR starts an audit, the taxpayer usually gets an email to check their logon details in the NBR online portal. Okay, the NBR always generally gives a deadline to provide this information. Okay, and this deadline is sometimes 2 days. That is quite tight for a business to get information to the NBR. So that's something to think about. This is what goes back to the point before, where definitely check your NBR online portal regularly. Now, once NBR has satisfied itself, it will either, so once they've done the audit, they'll either close the audit, or if they find issues, they'll issue a provisional assessment. Now, the taxpayer or the business can agree or disagree with the provisional assessment, and they have a deadline to respond before the provisional assessment automatically becomes a final assessment, okay? So far, the NBR has generally been performing desktop audits remotely and are relying on businesses to provide them information. I think the main struggle for businesses has been with getting their business records to the NBR on time in a very short space of time. So we recommend businesses take time to ensure their VAT function is well organized so they are not caught off guard, okay? This is especially important for larger businesses who've got offices and functions in different locations and where responsibility lies with different employees, okay? From my own experience, whilst working at the UK Tax Authority, I always found that where taxpayers made an error, but it was clear from their record that they had a robust process in place to ensure errors were reported in full, and they always tried to get their tax affairs right, I personally and the team was generally more lenient towards them than those who did not make any effort to get their tax affairs correct. Now, it's especially important that where there is uncertainty on the VAT treatment of a transaction, you take written advice and you keep it as supporting evidence of the basis. Okay, I hope that was helpful to you.
Thanks, Tariq. Now let's have a look at some of the highlights in the Digital Economy Guide, Healthcare Guide, and Education booklet. For the Digital Economy Guide, the NBR has clarified the VAT treatment for sale of goods via online platforms in the guide. Now, assuming the supply is in Bahrain, 5% VAT will be applicable if the goods are sold locally, and 0% VAT is applicable if the goods are exported. Now, the guide further elaborated on the sale of goods by non-residents suppliers. So if any of you are in the e-commerce business, this guide should be useful for you to determine the relevant VAT treatments. Now, the guide also elaborated on what is electronic services and its VAT treatments. As a refresher, the place of supply of electronic services is where the services are consumed or performed. Now, if the services are consumed by non-registered persons like you and I, the supplier will need to register for VAT in Bahrain. Now, as most of you would know, for those of you who has iPhone or Netflix, you are probably being charged 5% Bahrain VAT, as these companies are required to register in Bahrain for tax purposes. Now, let's move on to the Healthcare Guide. It provided a list of qualifying medical services which is subject to VAT at 0%, which covers most of medical services. Now, a point to note is that cosmetic procedures are generally subject to 5% VAT, unless it is provided as part of treating a medical condition or a critical physical discomfort, as determined by a qualified medical professional, and which means there is another job scope for fellow qualified medical professionals or doctors, which is to determine whether a cosmetic procedure is subject to VAT at 5% or not. And the education booklet released also in April 2019 clarified in order for zero rate to apply, the school or institution must be licensed by the competent authority in Bahrain, and supplies must be provided directly to the students. And remember, certain education services are subject to 5% VAT. For example, professional education and certain vocational trainings. Now, just before we move on from this slide, let's spare 10 seconds to attempt this question. Now, can you recover medical insurance for your employees? Is it A, yes, or is it B, no? We'll give you 10 seconds to attempt the question now.
I'll just make after you, I'll just make a comment.
All right, thanks for attempting, folks. And the answer is A. Now remember, you are able to recover medical insurance for employees if it's mandated by the labor law. Medical insurance may be viewed as personal use, but if it's mandated by other laws, now in this case, the labor law, you should be able to claim the input tax credit. There have always been discussion on whether a company can claim medical insurance incurred on dependents or family members, which is most probably incurred for private consumption. Always remember to ask yourself, is it mandated by other laws in Bahrain and thus unlocking my input tax credit? Now, if you're unsure though, consider connecting with your tax advisors to request for their professional opinion on this.
Just to add a point to that, for those listening, a lot of businesses will claim back import tax in relation to costs that they incur for employees. Now, as Dow's been saying, essentially the requirement is that the cost that you pay must be a requirement by law in Bahrain. Now, if you have a contractual obligation between the employee and the company saying, we'll give you a house, we'll pay for X, Y, Z, that doesn't mean it's a contractual requirement by Bahrain law. That's a contractual requirement between you and the employee. So you definitely want to run these things past HR before you recover your import tax. And HR will tell you whether there's an obligation by law to provide a certain benefit to an employee, okay? And just a quick one for those who have joined us, a bit later on, there's a Q&A box on this chat function. So if you type your questions in straight to the Q&A box, we've got 2 panelists online who are answering questions, as soon as they come in. So that's really a useful tool. Okay, thanks.
Excellent, Derek. Thank you very much. Now let's move on. Now let's have a look at this slides on classification of business services and MAP. Now, MAP is a procedure to consult and resolve international tax disputes and avoid double taxation arising from taxation not covered under the Double Taxation Convention. Now, in Bahrain, the competent authority for such matter is the Foreign Tax Relations Directorate in the NBR. Now, the guide further elaborated on the timeline for MAP requests, as well as the steps and informations and documents required for such requests. Of course, the guide also outlines the process for requesting a tax residency certificate, and I'd like to invite Mark once again to further explain on this.
Yeah, thanks, Dal. So perhaps the most important thing coming out of this MAP guide is the fact that businesses now request tax residency certificates from the NBR. Previously, you requested from one of the ministries. So for those that aren't aware, if you've got operations or you enter into transactions in other jurisdictions where there's, say, withholding tax, under double tax agreements, there's often preferential rates or reduced withholding tax rates, depending on what country you're resident. And sometimes Bahrain is a signatory to those double tax agreements. So it is relevant to consider, and usually to get that concession, you need to provide a tax residency certificate saying that you're a resident of Bahrain. So you now request that from the NBR. So that's an important update for those with operations elsewhere.
Thanks, Mark. Now, regarding the classification of business activities guide, this is mainly for VAT registration purposes only, as it outlines how to classify your business activities. Similarly, this is probably useful for your CR registration or amendment purposes, in case you want to add more activities to your existing CR. Okay. Now let's move on to the first public clarification that we will be discussing today, which is the proportional deduction ratio for input VAT. This is particularly important for financial institutions as the NBR clarified their position on how to report margin-based transactions for proportional deduction purposes. The NBR's view on this is that all margin transactions shall be considered as absolute value when you are calculating your proportional deduction ratio. For example, if you look at the table here, now the accounting value of your transaction is 250 BD profit. The value of supply for VAT purposes is 250. Now on the second one, if you made a loss from an accounting point of view, for VAT proportional deduction calculation purposes, you have to take it as a positive amount. And on the third one, 300 profit and 300 value of supply for VAT purposes. Now, in all, for VAT proportional deduction purposes, you will have up to 725 PD as a value. That's what essentially the NBR is trying to say. So what it means by absolute value is you're going to have to convert your losses to gains for calculation purposes. Now, the clarification was issued in late December 2019, and the NBR has made it clear that no amendment is required for your submitted 2019 VAT returns. Financial institutions only need to consider the clarification above when they are calculating their annual proportional deduction ratio. However, moving forward, the financial institutions need to consider absolute value for partial exemption calculation purposes. Before I pass on to Tariq to discuss about warranty repairs, I just have another question and just see if you can try to attempt this. In which VAT return should you perform the annual partial exemption calculation? Is it A, in the last return of the year? Is it B, in the first return of the following tax year? Or C, either of the above? Now, some of you may not be able to answer this question if you're not in the mixed supply business. No worries. This is just to make sure that people who are involved in mixed supplies know exactly what they need to do. Just give a few moments. All right. And the answer to this question is C. Remember, you may either report in the last return of the tax year or first return of the following year. Essentially, there is no rush to calculate your annual proportional deduction ratio for those of you who will be busy with year-end closing in the month of January, right? Okay, now, Tariq, over to you.
Thanks, Dal. Okay, NBR released a public clarification on warranty repairs. It outlined NBR's view of the VAT treatment for amounts recharged by a Bahraini dealer, usually a retailer, for repairs of faulty goods. So running through an example, what usually happens is that a manufacturer sells goods to a retailer with a standard manufacturer's warranty, say for example 3 years. The retailer then sells the same goods to a customer. So a customer walks into the shop and purchases goods with a 3-year standard manufacturer's warranty, okay? Now, if something goes wrong, the customer is not going to go to the manufacturer. They'll always come back to the retailer, as that's where they've purchased the goods from. Now, the retailer has an obligation to repair those goods because they have a warranty. And so what happens in practice is that the retailer gets in touch with the manufacturer and says, hey, there's something gone wrong with your goods. The manufacturer gives approval to carry out a repair on those goods. Now, if a manufacturer approves a repair, which they normally do under warranty, they'll usually request the retailer to perform the repair on their behalf, okay? And then the retailer would recharge the manufacturer for the repair cost. Now, the recharge would obviously include a component for any parts required under labor charges, okay? So what the NBR is saying is that this recharge that the retailer makes to the manufacturer is outside the scope of that, but only to the extent of cost incurred by the retailer. So if the retailer makes a margin, that is subject to that at the normal rate, so usually 5% if the goods are physically in Bahrain. Now, please note this only applies where the standard manufacturer's warranty is an integral cost component of that supply from the manufacturer to the retailer and then from the retailer to the customer. If that's not the case, VAT will apply as normal. Okay. However, if the customer took an additional warranty or an extended warranty from either the manufacturer or the third party, then the repair performed by the retailer under such warranties are not considered as integral cost components of the original supply. And so any repairs that are carried out by the retailer for extended warranties, etc., is not outside the scope of VAT, and they should charge VAT as normal, okay? Right, quick question. Mark gets his car repaired under a manufacturer's warranty. Will he get charged VAT for the repair services? A, yes, standard rated supply of repair services. B, nope, out of scope. So I'll give you 5 seconds because it's a very easy question, I'm sure. Okay, the answer is B. Why is the answer B? Because the repairs carried out to Mark's car is not considered as a new supply for VAT purposes. So what the repairer is really doing is repairing the goods that should have been working properly anyway. So it'd be unfair if Mark was charged VAT twice. Okay, excellent. Right, we'll talk a bit about public clarifications for travel agents now. So as of 1 August 2019, that's last year, NBR clarified that where travel agents provide ticketing services that are directly related to the international transportation of passengers, any commission charges, service charges, or admin charges charged by the travel agent, and it doesn't matter who's charged, the airline, the shipping company, third party, it's zero-rated for VAT purposes if the place of supply for the ticketing services is Bahrain. So essentially that means that there's a very wide concession for travel agents, and there are no specific conditions that need to be met, just needs to be in relation to international transportation services, okay? Now, from the travel agents we've worked with, we've noted a lot of errors being made in working out what the actual amount of the supply is. Now, usually a travel agent acts on behalf of an airline. So when a customer buys a ticket, so you go to Gulf Air, we know the we go to an agent, we know the travel agent is not selling the ticket themselves. They are selling the ticket on behalf of an airline, and the airline is the one that would actually provide the flight services to us. So we know this, okay? So the cost of the airline ticket when the agent sells it to us is only collected by the agent and passed on to the airline, okay? The ticket cost is not the travel agent's supply for VAT purposes. The travel agent supplies are the commission charges or the admin charges that they make, okay? Now, there is a tax invoicing concession for disclosed agents. Where a disclosed agent charges a commission, the tax invoice may state only one amount for the ticket cost and the commission charges. There is no requirement to separately itemize commission charges from the ticket cost. Otherwise, the customer would work out the commission made by the travel agent. That would not be a good idea, okay? Now, from a VAT perspective, a travel agent should only report the commission they earn on their VAT return, not the total ticket value, okay? Because the ticket cost is a disbursement for them. Now, last point, any taxable person who makes a purchase from a travel agent should report the total cost in field 12 of their VAT return. So this will apply to all businesses. Whenever you purchase a ticket, just put the whole amount in field 12, and that will be correct. Okay, Dan, over to you.
Thanks. Thanks again, Tariq. Now let's move on to the first NBR updates that we will be discussing today, which is a tourist refund scheme. Just like the UAE, Bahrain's tourist refund scheme is operated by Planet Payments. You will find dedicated Planet Payment desk in Bahrain International Airport, and there is where you claim refunds, if applicable at all. Now, prior to claiming the refund, you must ensure that the goods are purchased during your stay in Bahrain, purchased for personal use, not fully or partly consumed, and you must always remember to purchase from a registered or authorized merchants, okay? Now, you also need to ensure you have the sales receipt with the VAT refund tag attached. The purchased goods, of course, your passport, and your outbound ticket, okay? Now, also the update has also clarified that the tourist refund scheme excludes motor vehicles, boats, and any unaccompanied goods. So you need to make sure for all the goods that you want to claim refund for, you will have to bring it up to the plane with you. Do not check in into the bag. Now for businesses in Bahrain, there's a specific way to report Planet adjustment transactions. If this is relevant to you, please get in touch with us. We are more than happy to help you. Okay. Now the next update that we will be discussing is can be found in the FAQ section actually in the NBR portal. The first one is on mobile phones and motor vehicles, which are made available for both business and personal use, otherwise known as for mixed purposes. Now, the NBR came up with two methods for those of you who uses mobile phones and motor vehicles for mixed purposes: the simplified method and the actual use method. Now, obviously, the simplified method is meant to make your life easier. The NBR has said that for motor vehicles, you can recover up to 40% of the input tax incurred, and for mobile phones, you can recover up to 60%. However, you must remember that if the personal usage of mobile phone is more than 50%, you are not eligible to use the simplified method. In both instances, the irrecoverable portions will be a cost to the business. And remember, if you opted for the simplified method, you are required to use it for the next 2 years before changing it to the actual use method. Now, if you're not satisfied with the simplified method, you of course may opt for the actual use method, which may be administratively taxing. For motor vehicles, for example, you're required to document the distance traveled for businesses and personal purposes, which means you probably need to have a logbook to track, and the driver has to update the logbook all the time. As for mobile phones, you probably need to look at the phone bill and identify personal calls, remove them from income tax claim, and maintain records setting out how this is calculated. Now consider all the requirements and probably cost, because you may need to employ more personnel just to track the private usage. You may just be better off opting for the simplified method. And the next update in the FAQ section is actually in relation to related persons. Now, the NBR has clarified that related persons for VAT purposes include employers and employees. As a refresher, any sales made to related parties are required to be reported at a fair market value, even if the consideration collected does not reflect so, which means the balance or out-of-pocket portion may be a cost to the business. The market value is the fair price tradable in the open market between two independent parties in similar circumstances, where neither party is subject to commercial pressure. The parties work independently to achieve their best interest, and there's no time pressure on transaction.
Guys, I just want to add a quick point there about input tax recovery, especially for motor vehicles. Now, a lot of businesses phone up and say, look, our motor vehicle is not available for private use, but they have no records to demonstrate this, that it's not available. If you can't physically demonstrate that it's not available, then it would be very difficult for you to recover 100%, and you may end up getting penalized, because if you have no records in place, you have no way to substantiate or prove to the NBR from the records, because you hold none, that you're able to recover 100%. So just be careful around that, please. Okay.
Well, Tarek, what kind of records would you keep then?
Sorry, just come again, Mark?
What kind of records would you expect clients to keep?
Yeah, so generally you'd expect a detailed mileage log, and some companies I know, they also have HR policies, which must be enforced, saying that no private use is available for vehicles and action will be taken against those that do. But I think having a mileage log is definitely something that would need to be kept. Just because early days with the NBR, it's quite early, so NBR has not challenged anyone on this just yet, but just to be on the safe side, it's better to ensure that we have a full detailed mileage log. Yeah.
Thank you both. Now this slide, one of the last slides, this is regarding the Tax Appeals Review Committee, and I actually would like to invite Mark once again to go through, because he has first-hand experience on this. Please, Mark.
Yeah, no worries. So the Tax Appeals Review Committee only sat for the first time in the first week of March. But if I take a step back and maybe talk through how we get to the Appeals Committee. So I guess where it first starts is you receive a penalty from the NBR. So a penalty for, say, late registration, penalty for lodging your VAT return late or paying it late. And you receive a penalty statement. And you'll also receive a bill at the same time asking for the penalty to be repaid. So the first step is to actually write to the NBR itself and request that the penalty be waived or remitted if in fact it has been incorrectly imposed, or if, say, for example, you have a good reason for submitting the VAT return late or something like that. So first step is to apply to the NBR. They will take some time to consider your submission. And if they're happy with the submission, they will obviously waive the penalty or reduce the penalty, and you can end it there. But if they choose to uphold the penalty, say they think that was correctly imposed, then your next step is to actually apply to this Tax Appeals Review Committee. So you need to do that pretty quickly. So once you receive the confirmation from the NBR saying that the penalty will remain, you have 30 days to apply to the Tax Appeals Review Committee. So you do that by a written submission in the first instance. So you'll set out your position, why you think the penalty shouldn't be imposed. And then the Tax Appeal Review Committee will invite you to appear before them to provide any additional verbal submissions. So the Tax Appeal Review Committee is made up of independent parties. So they're experienced in tax, finance, the judicial system. So they're independent from the NBR, but they are very experienced adjudicators. They will then listen to your verbal submissions. They'll go away for 30 days, make their recommendation to the minister, who will then has a further 15 days to make their decision as to whether the penalty should be upheld or not. And the next step would be, say, if you get an unfavourable response, the next step is the courts. So the Tax Appeal Review Committee is the last line before you enter the formal judicial system. So I guess practically, if you have any penalties, just be mindful of the timeframes that do apply. You need to be pretty quick. And a key point is that you need to actually pay the penalty before you can appeal. So if the penalty is large, you need to make sure you pay it before you actually make the appeal to the Tax Appeals Review Committee.
Thank you, Mark. That was a very detailed explanation on the Tax Review Committee, and I hope that's helpful. And this is the last slide for today's webinar before we move on to our Q&A session. Just a quick one, the NBR has been emailing VAT-registered taxpayers to advise that all branches linked to a commercial registration number are considered to be registered for VAT, and that taxpayers, you guys, should ensure the details of every branch is updated to your NBR's online portal. This is important for businesses who are using a sub-CR because they effectively need to check the VAT registration status of the main CR, because the main CRs and the sub-CRs are considered as single person for VAT purposes. So therefore, if the main CR is registered for VAT, so does the sub-CRs. On the second point, there has been instances of taxpayers having their commercial registration suspended by the NBR for failure to comply with the VAT laws. And it is clear that the NBR is taking an aggressive approach to ensure businesses comply with the VAT rules. Now, as VAT in Bahrain is fairly new, you may consider engaging a third-party consultant, perhaps to help perform a health check on your tax implementation and internal procedures to at least give you a degree of comfort. On the third point, the Cabinet has stated that the government will absorb VAT payable on EWA bills effective February 2020. This is a welcome news, of course, from the government to ease the financial burden as a result of the COVID-19 pandemic. And lastly, unfortunately, the NBR has not announced any extension to VAT returns as a result of the COVID-19. You should ensure they have contingency plans in place to ensure VAT returns for the upcoming tax periods are submitted and paid according to the statutory deadlines. Okay, now before we conclude our webinar, let's go through some of the questions raised in the Q&A section. Mark, over to you.
Yeah, so there's been a lot of really good questions. I've tried to answer most of them as we've gone through, but there's a couple that are still outstanding, so I'll answer those live. So question, does motor vehicles cover all types of vehicles from motorbikes and cars to pickups and HGVs, which I'm assuming means something heavy vehicles? So guys, you want to provide a response to that?
Well, I mean, I think it says motor vehicles, so I mean, obviously definitely get advice before you implement the VAT treatment, but motor vehicles would generally cover vehicles that generally are used for private and business use. So if there's a big truck, for example, then the trucks, in our view, that's not subject to these requirements. But if you have like a pickup truck, then yes, because pickup trucks are commonly used by families to go out, so it would apply to that. Motorbikes, again, it can be used for personal use, so it should apply to that too. Would be our response to that.
Cool. So when you've got that kind of dual element of business and private use.
That's right.
Okay, so if we sell a used company car to an employee, how can we assess the market price? And if we sell one of the used cars to any party, how do we assess the market value? So the question, I guess, is that how do we assess market value when we sell to an employee, so a related person, and how do we sell it? How do we assess market value when we sell it to any third party? So I'll start off with a quick my thoughts on that. So it's getting at how do you value a transaction when you have a related person? So a related person is someone who can control the organization, is someone like an employee who has that strong relationship with the organization. And you need to make sure that you're making any supply to a related person at that market price. And market price is one of those nebulous terms that you need to look at. What would a person who's unrelated, has no interest in the transaction, what would they pay for that good? So that's how you assess market price. So it's in the general concepts of market price. And the NBR, I think they provide reference to transfer pricing rules as well as to how to calculate market price. And I guess as a general point, if you are selling to an independent third party, the assumption is that the sale would be at market value. Tariq Khan, I don't know if you have anything to add.
Yeah, what I'll add to that is, I mean, how do you physically evidence something? So I guess you could go on a second-hand car website, an independent one, maybe take 3 screenshots of 3 similar cars being sold and maybe take an average. At least you can substantiate a basis for the market value. But if you have no evidence, you might have issues. So I definitely recommend getting some evidence of, external, where you go to an external source and you keep that as part of your VAT documents, for record purposes. That's what I would say.
Yeah. Another question, if I have received a penalty payment from the NBR, should I appeal? What do you guys reckon?
I think it is important to assess what the penalty is before the appeal. We need to make sure that, you need to make sure that you've done everything correctly prior to the appeal. Look at whether the NBR has basically used the correct provision to penalize you, essentially. And of course, if you have underpaid your liability and the NBR, first of all, NBR has the mandate to penalize you up to 25%, somewhere between 5 to 25%. So if they went for the 25%, perhaps you could appeal on that. But always remember, and I think Mark has mentioned in the earlier slide, you must pay first before you appeal.
I'll just add a quick point to that. I mean, so if you get a penalty, I think you should always appeal, because there's always a chance that you can make a case saying, I've made a mistake, I'm a new taxpayer, I'm not familiar, and a sensible outcome is for me not to be penalized this time, but what I'll do going forward is ensure that I get my tax affairs straight and I make sure I get advice as well. I don't think there should be a case where you don't appeal. I just think you should always appeal. That's what I think. And before you go through the appeal process, maybe consider asking someone, because we've also had cases where the NBR's incorrectly penalized businesses. So where NBR said it's standard rated, but actually the supply is completely outside the scope of VAT. So the business didn't actually know that, but it's just because they asked for advice, they realized that actually there should have been no penalty, and there should have been no VAT as well in the first place. So it was penalties plus VAT incorrectly charged or assessed by the NBR. Yeah.
Okay. Another question, please, can you explain the whitelist concessions? So this is just getting at the whitelist that's available for companies that operate in the international transportation industry. So what this is doing is saying, if you're selling a vehicle used in your business that is predominantly or majority used for international transportation, then when you buy and sell that vehicle, you can either treat it as 0% or as exempt, depending if it's imported or not. So you apply to be on this whitelist, and it's on the basis that your overall business for that year the majority of your business is international transportation. So you need to apply, and you need to then renew that concession each year. So a question around, is there a structure or a process map for the appeals process that we can share? Yeah, we do have one. So we will circulate. So that's an easy one. Another question around the appeal process. So is the TARC process in Arabic or in English? So you really should make the written submission in Arabic. The majority of the independent adjudicators obviously have Arabic as a first language and would prefer to communicate in Arabic. So you should make all efforts to do the submission, and then the verbal submission in Arabic as well, just to kind of facilitate that process. Can I take a VAT consultant with me to a TARC appeal? Yes, you can. You need to really make sure that you've got your procedures in place to ensure that that consultant is representing you before the NBR, and the NBR is aware of that. But the answer to that is yes. If we sell any item to any related party for a value below market value, how is the invoice format? How should the invoice format be? Should the invoice be generated for complete market value? Tariq, do you have thoughts on that?
Well, I think the requirement is to account for VAT at the market value. So to generate an invoice which is not the market value would probably make it difficult. So I think the sensible thing would be to generate the invoice within your systems at the market value. Now, there's a bit of a debate about whether it should be delivered to the customer, but if you give someone something, a different price, and you give them an invoice, for example, say you give something for free, but then you also give an invoice, it wouldn't make sense, right? I mean, so Saudi says that where you have a supply given for free, you don't need to issue the invoice. Bahrain says issue the invoice and deliver the invoice, but we know of clients who issue the invoice within their system, but they don't give it to the actual person. So definitely I would recommend you get a bit further advice depending on the scenario playing out in your business.
Okay, just maybe another 2 questions. So who is responsible to pay VAT for goods imported on behalf of the importer as agent only, and the agent gets fee for his service? So this is getting at the scenario where you engage an agent to import the goods on your behalf, and the agent charges you a commission. So how do we go about recovering that import VAT? Val, do you have an answer?
Yeah, I think in this case, first of all, the person responsible to pay import VAT will always be the importer of record. So if you as a business, you are importing goods, but you have appointed a freight forwarder to do it for you, the freight forwarder may pay in advance for you and will subsequently recover the same exact cost, the VAT cost that he has paid from you. And in this case, always remember the person who has the bayan, the person whose name and illegal entity name, CR, as well as VAT registration number stated on the bayan would be the person eligible to claim import VAT. And of course, any services charged by a freight forwarder would have to be claimed with a valid tax invoice issued by your freight forwarder. Okay.
I just want to add a quick point on the import bayans. The import bayans, for you to recover VAT, you should have your tax number on there, your CR number, and your name. So just make sure your freight forwarder is passing the details on correctly to the customs authority. Otherwise, you will not be able to recover VAT.
Sorry, also on a quick one, please check the tax invoices from a freight forwarder, because when they recover VAT that they have paid on your behalf, there should not be any additional VAT calculated on top of that, because that is a disbursement, and a disbursement is not within the scope of VAT. All right.
Okay, great. So there's a couple of concepts there around disbursements and reimbursements, as well as maintaining that documentary evidence. Okay, so maybe maybe 2 last questions. Can all these webinars be uploaded on YouTube or another website? So these webinars will be made available online on the Keypoint website, so you'll be able to find them there, and we'll send around a link to everyone anyway. And the last question: transactions made between head office and its branches, are they out of scope for VAT? Tariq Khan, what do you think?
Yeah, so any transaction made between a head office and any of its branches, irrespective of whether it's in Bahrain or outside of Bahrain, is outside the scope of VAT. So it's as though no supply has been made. Okay? So that should not be reported on the VAT return.
Great. And I think it's just important to remember with the branches and the head office, what we're getting at is the CR and sub CRs as well. So you have a CR with a main CR, and then you have sub CRs underneath it. But it was the term branch is kind of used interchangeably with subsidiaries sometimes. So you need to be conscious whether you're talking about the same legal entity or a separate legal entity. But that ends the questions. So there's nothing further from me.
Okay, all right. Well, seems like the time is up anyway. And once again, thank you guys very much for joining us today. And I hope you learned something new. See you guys again in our next webinar, which is on Tuesday, where we will be discussing on financial services. Have a great day, folks.